भानु सर जिसको रिप्लाई किए।
अरे मैं वापस से सेंड करा भाई, वो आपको है देखो उसमें, आपको नहीं डाले तो कैसे रह सकते हैं?
नहीं मिस तो हो जाता कभी कभी, वापस भी नहीं आया मेरे को, कुछ तो प्रॉब्लम आ रहा जीमेल में, आई डोंट नो व्हाई। 2-3 क्लाइंटों से इशू आया ये। आपको यू आर फेसिंग सिमिलर इशू सर? नहीं, आप तो वैसा भी आउटलुक यूज करते हैं, जीमेल में आ रहा इशू।
पता नहीं, क्योंकि मैं वापस से आपको फिर भेजा, देखो जो सेंट आइटम फिर डाल के भेजा मेल में। आप म्यूटेड हो गए। नहीं, अभी गणेश भाई आए, आके उनका भी वही प्रॉब्लम है, इसलिए मैं आपका आवाज सुनने को थोड़ा बेताब था, मेरे पास प्रॉब्लम है या दूसरे के। Welcome Mahendra Reddy sir, welcome Matesh Reddy sir. जस्ट एक बार मैं YouTube लिंक भी डाल दूं। दीपक, अगर YouTube लिंक शेयर करना है तो कर दो।
अभी
परफेक्ट है गणेश।
So maybe you're right. You go back and come in.
वो पुराना बजाज का
पेट्रोल नहीं है तो बिटा के मारो यार।
के मारो।
गुड इवनिंग गणेश सर।
नमस्कार लदा साहब, नमस्कार। आपको शेर शायरी बोलने की जरूरत नहीं है, ठीक है? फूलों के फूल कैसे खिल रहे हैं उसके बारे में बात करने की जरूरत नहीं है।
वो हमारा बानना है तो तभी।
हाँ,
वो तो शेर शायरी के लिए भाई।
चलो दिलदार चलो, पूरा रहता उसका।
शेर शायरी की जरूरत नहीं है, सब कुछ है।
मैं एक बार शेयर स्क्रीन का दे रहा हूँ।
I'm just seeing if you are able to see my screen.
Yeah, I just gave the rights. Ganesh, I'll also make you co-host also, so that just in case something goes wrong, Deepak, आपको भी मैं co-host कर देता हूँ.
No problem. So this is fine, right? You're able to see the screen.
Yes, Ganesh, perfect.
All right.
So you are the co-host also.
Okay.
And YouTube का link भी मैं chat में अभी रखा, फिर से रख देता हूँ. ये live हो रहा भी YouTube.
Now that you are the king now.
खाली यही काम कर रहा हूँ आजकल.
You are earning the goodwill, my friend.
ठीक है.
It can't be beyond it.
Wait, 1 second.
अरे
मैं अभी वही बोले तो तुम आ गए बोलते मैं आया। एक बार वो लिंक पे करो ना, मैं इधर से ले लेता हूँ, क्योंकि मैं मीटिंग खोल दिया। नहीं, तुम लिंक पे मीटिंग आईडी वो दिया ना मेरे, उससे मत करो। 1 मिनट। दीपक,
सर
तुम्हारे पास मेल आया ना, इमीडिएटली दया को फॉरवर्ड करो, ने परेशान हो रहा। वो मैं गलती से नहीं गया दया के पास।
पैनलिस्ट का
हाँ करे ना। एक मिनट कर, दया सीसीएम पे भेज रहे, dayaniwas@gmail।
दया CCM
दया सीसीएम पे भेज। हाँ भेज दिया दया सीसीएम टेलीन को। 2 मिनट। भाई वेलकम।
गणेश भाई, आपको हर बार है ना मेरे लेक्चर में घुसा देता है, इसलिए मैं आज आपके लेक्चर में आ गया।
बट क्या कर दिया मालूम, लद्दा साहब ने आपका नाम भी लद्दा लगा दिया।
नेम चेंज कर लीजिए सर। गुड इवनिंग सर, नेम चेंज कर लीजिए सर।
मैं कर रहा हूँ।
अभी गणेश सर, लॉजिक क्या है मालूम क्या? आई एम रिप्रेजेंटिंग ऑल माय मेंबर्स कहते हैं। आप एक काम करो पंकज भाई, गणेश सर का नाम लगा दो, मेरा नाम भी खत्म हो जाता।
मुश्किल हो जाएगा भाई, बहुत मुश्किल हो जाएगा।
बाजू प्रेसिडेंट ICAI भी लिखना पड़ता फिर।
नहीं दया, दिस इज योर क्या बोलते किंगडम। यू कैन कम इन एंड एग्जिट एट एनी टाइम।
सर यहाँ पे किंगडम हर 3 साल में बदल जाते।
बस जब तक राज चल रहा है, राजा है अब तुम ही हो।
नहीं सर, राजा तो नहीं है, हम तो प्रजा सेवा के लिए हैं।
अरे भाई तुम माचे तो।
Thank you very much for joining today. Really, I think the topic deserves you only, and you deserve this topic. Very simple.
एक काम करेंगे, एटम थोड़ा हट के बात करते हैं, ठीक है? एटम हट के बात करो, एटम हट के बात करो। तो अमरजीत चोपड़ा को ये बोलते हैं, उसको ये बोलते हैं, योर टॉपिक। अभी एटम हट के बोलो। तो ये टाइम डोंट रिपीट द सेम थिंग। आई एम वार्निंग यू। अभी इसके पहले बोल रहा था फ्लावरी रोजा, वो सब बंद करो।
चलो बस it's 6 p.m. So friends, on behalf of Hyderabad branch of SRC of ICA, I take pleasure in welcoming the speaker of the day, CAB Ganesh, popularly known as Ganesh Bhai for all of us, for this topic, CARO 2020 from Auditors Lens. Many people, in fact, today I had a strange thing where many people started calling and asking me, why are you having CARO 2020 at this stage when we are trying to still resolve CARO 2016 and we are doing audits and it's no longer applicable? What is the hurry? Friends, I'd just like to tell you one thing, that it is definitely applicable for the transactions which are being done now. And what we thought during my discussion with Ganesh sir is that, look, this is the time when you are at the client's place, you are discussing with the management and all. And if you are aware of this niche provisions, at least we can talk to the management now and ensure that things are in line so that we don't get into problem at the later stage. That's where, knowing well, Ganesh bhai, that many people may not join, I still requested you to come and take, and thank you very, very much for taking this, because we all at the managing committee felt that this is a very apt time for discussing CARO 2020 rather than doing the postpartum job. So I also welcome Dayaniva Sharma ji, Central Council member, Deepak Ladda ji, secretary, and all the 58 and adding members who are joined till now. So without wasting much time, I'd request Dayaniva Sharma to give quick opening. Again, I'm not using word brief thereby. It's quick opening remarks, and then we'll take over.
Thank you, Chairman. Pankaj Bhai, Secretary Deepak Ladda, and welcome to Ganesh Bhai for a very interesting session on CARO 2020. Rightly said by you, Pankaj Bhai, that it is not the matter of time. It is already the clock started clicking, and we are actually late. Rather, I'll put it that way. If people have not understood CARO 2020 by now, I think the people are not understanding a fact that one quarter is over, second quarter is about to get over, and half yearly we have to give balance sheets for the listed entities. Not only for listed entities, but the kind of situations which we have gone through on the CARO COVID times, particularly the first quarter, might be till 31st March 2020, we had certain things to say that, up to 23rd of March, I was actually operating, so that should not be considered, this should not be considered, which Ganesh Bhai might be actually facing every day in, day out for signing any balance sheet, which I am also equally doing, and most of us are actually going through that process. But the fact is very simple. The fact is that 31st March 2020 is over, 1st April 2020 started, first quarter got over, second quarter getting over, and the impact on the financial statements have been very bad and poor. I think a couple of companies have not even recorded any turnovers. And unfortunately, the carrying cost of the inventory and the kind of other things which are critically to be evaluated, though might be I have got a moratorium with regards to a bank loan, but that doesn't mean that bank loan is the only wherewithal. If I am doing a transaction in my manufacturing company, or I am doing a trading and it was a perishable item, my entire stock is gone for a toss. I cannot give a stock statement. And today, CARO 2020 specifically talks about the statement which is being submitted to bank. Now, the moment if my stocks are being perishable and they are going to almost go for an expiry, or almost kind of go for expiry kind of situation, who's going to buy? And even if it is going to be bought, it will be at a discounted price. What is the adjustment which has been done to my financial statements? How that need to be reported in my financial statement? June is over. September is coming. September, in case of listed entities, we need to have balance sheet and average balance sheet, as well as profit and loss account, which need to be produced. And the most important part which is there in CARO 2020 is with regards to the stock statements, which is to be recorded very effectively, rightly, and we need to make a statement with regards to that. Not only this, when you talk about moratorium for bank might have gone through, but again, please understand, my creditors still stand strong. My unsecured loans which are there still stand strong. There is no moratorium which has been given. I need to do certain adjustment. I need to do some kind of reporting. And all these things are going to come in a different form. My first quarter, I might have taken a hit with regards to my rents or my other expenditure. I might have defaulted in certain payments of TDS or other statutory liabilities. I might have paid labor charges. Manufacturing was not there. So I have paid certain expenditure for my factory operations. Now, where do I take these numbers? How do I report? Do I increase the value of my stock? What do I do? Either I should charge it to P&L. So there are so many questions which are going to come, and the best part is, and the worst part about it is, that today the banks are asking chartered accountants to certify certain numbers. And if our members don't understand today, I think we are going towards the wrong side of our career. We might be thinking that there is a relation with the client, but that client relationship will not stand strong, because your statements which you are going to give are going to be taken on record as a chartered accountant certified these financial statements. And most of the cases, larger firms or mid-sized firms are not signing those numbers. I request the other chartered accountants who are not statutory auditors to certify any number and give it to any company. I'm sorry, I'm making a very bold statement, but that is the protection which we need to take care of our chartered accountants. Tomorrow, God forbid, a young chartered accountant certifies a stock statement and gives, whereas that stock statement doesn't, that stock itself doesn't exist. Who's going to take the blame? There are two people who are going to get impacted. One, a person who certified, and number two, the statutory auditor. Because you have relied based on certain information. What is the reliance part? Lot of things are actually coming up. And one thing which I would like to tell all our members who are there today, whether in industry or whether in practice, most important thing which is going to be critical to demonstrate your innocence and your truth and your professionalism is only your documentation. If you go through the CARO 2020, the detailed, if you can take one assignment. If you want to talk about a professional opportunity, you can actually take one assignment for every clause, if I am not wrong, Ganesh bhai. Right? So the point which I am trying to drive is that audit documentation is going to be very crucial during this time. If you are going to record nil statement of stock, liability recorded, debtors position, whether you want to talk about sales, my other income and all are going to be very relevant. And I think today, please understand, today everyone is talking that this is a pandemic, and everyone is taking an excuse of extension. But remember one thing: these all assessments are going to happen when the normal life is going to start. At that point in time, this feel of pandemic will not be there in the mind of income tax officer, MCA, or any other person. It is high time that we actually realize this fact, that the documentation requirement and the procedure. Please, friends, I am requesting you, it is not early. I think we are late to discuss CARO 2020. But at least we are doing it before the September close, because the financial closing, where it is listed entities, we need to sign certain numbers and all. So it's going to be very critical and crucial. And one more important thing is 31st March, whatever you are going to sign, remember that it is going to have an opening stock effect or opening balance effect. So we cannot actually ignore many things. And this CARO, no person can be better than Ganesh bhai, who actually understand from the both sides. When you talk about a larger organization or a smaller organization, doesn't matter. Stock is a stock, cash and bank balance is a cash and bank balance, debtor is a debtor, creditor is a creditor, outstanding loans are outstanding loans. As simple as that. So let us listen to Ganesh bhai. And I think, Pankaj bhai, this is the first session we are having on CARO. Rather, I would request that, as Hyderabad branch, we should continue doing every month CARO 2020. Because tomorrow, people should not take an excuse that institute has not taken that initiative to give them that kind of knowledge. Let us, as an elected representative by our own members, be ready and ensure that our members get ready for all the kind of situations which are going to come forward. And I'll join back in during the closing remarks, but I'll keep my screen open and try to listen to what Ganesh bhai is saying, because a lot of input might have been given by him. And I still remember the kind of contribution he was making when we were discussing on the consultation paper. It is, Ganesh bhai, you understand both sides of the profession, whether it is a smallest of the firm or the largest of the firm. You understand that, and request you to kindly share your, wisdom and knowledge and experience. And most important part is, PR Ramesh sir, whom you follow and we all follow, has been a very big support for all of us to ensure that the compliance are at the top level, right? And if your contribution comes from a guidance point of view, will be of a great help. And I hope that will continue. Thank you very much.
Thank you, Dea. I think for the first time I'm hearing you on the topic. I'm very happy about it. So thank you very much. And I also admired that you were very conscious about the time. And as a starting man, I would always start with a century. So we already hit the century, Mr. Chairman. So no introduction, nothing. Deepak bhai, just listen what it is. Thank you, Pankaj. Thank you, Deepak. Thank you, Dea, for all of your introductions. Let me come back on while you guys will be there online and you will be watching what is happening. It's all fine. It's all my show for the next whatever 2 hours which I have. I'll try to do justice as far as the the presentation on guidance note is concerned. Just let me know you're able to see the slides. You're able to see the slides, right?
Yes, we can.
Yes, yes.
But the voice is clear, loud and clear.
Voice is clear, Ganesh, don't worry. And Ganesh, just 1 second, I'll not introduce you, I promise you. I request members to please enjoy the session. Don't keep writing your membership numbers and all, because it is disturb. Every time the message pops up, the speed breaks. Okay, so let the speaker enjoy talking and let us all enjoy listening. Let the questions come in Q&A only. And don't worry, we will find you out to give your CP hours. Okay, so Ganesh bhai, over to you. I think I'll stop.
Yeah, thanks Pankaj, thanks Deepak आप आराम कीजिए, हम कारो के बारे में बात करेंगे. So just to let you know, and I think one of the points that came up when Pankaj was talking, because when I started, it was COVID-19 financial statements audit during the COVID period, and probably that's the first session that we did in Hyderabad. And I'm telling you, I'm talking about the future of the balance sheet. With today, with so much of guidances that have already come through the institute, you would have actually be surprised the manner in which we started our thought process of how to do an audit during a COVID period when there was significant lockdowns, and how as an auditor that you obtain sufficient appropriate audit evidence. Now, why is CARO relevant? And somebody said that, why are we taking now? And I will tell you that as we discuss during the next 2 hours as to why this is relevant. It is relevant because that it is not about the CARO that is applicable from this year, because some of the clauses requires you to even report of the previous period. And that is the reason why this is very, very essential. Number one. Number two, there are certain clauses in which you have a reporting responsibility to various regulators. So therefore, it is when you are engaging for the year 2019, and I do understand you're struggling through your UDI extension processes or the AGM processes, please be informed that your engagement with the client, with whichever client that you deal with, you should now educate them in CARO 2020. Let me also tell you why this is very, very important. If you start educating the CARO 2020, when the year ends, which is March 21, in the last month of March or in the 1 month before the last month, which is February, every time the Ministry of Corporate Affairs awakens this thing and issues a new guidances for which we again need to battle around. One of the things which will undergo change will be Schedule 3. Schedule 3, which is basically the format of the balance sheet, profit and loss, and all of that cash flows, those are going to significantly change, which will be similar to what we have as of CARO. Simple example. Suppose if you have to come up and say, whether one of the clauses talks about whether the company is in a position to repay its liability. You're talking about ratios. Without company preparing the ratios, how can you comment upon it? How can you comment on something in a CARO which is not available in the financial statements? And therefore, it is imperative that the financial statements also should include all of these clauses. In other words, the Companies Act on the presentation of financial statements will undergo change. Number one. Number two, whatever we comment today, and in fact, they are touched upon very, very emphatically on the audit documentations. There are two things which are different, which have been brought in the guidance note. The guidance note was issued as early as June 2020. Now, the question then comes up is when it talks about an audit documentation and it talks about materiality, because the concept of materiality has been brought in, you will find many of the clauses speak about materiality, discrepancies if it is material. So you need to understand the concept of materiality. You need to understand the information related to documentations. SA 230 talks about documentations. SA 320 talks about the materiality.
Now, to that extent, your understanding has to be much, much clearer. Now, if we were to take the company as such, we almost reached 6 months with or without operations. There are many companies which has availed what is called a moratorium of their loans. And if you see the clauses that are applicable for reporting includes various aspects of it which you need to understand. No longer you can go and comment stating that in our opinion without having a backup documentations. And that is the reason why CARO 2020 you should start looking at now itself. The guidance note issued by the ICI is very, very comprehensive, and I would recommend you to go through that because that forms the basis of your discussion with your client. Let me give today's agenda. I will talk about the history. You would know from the Macro stage 2 what we have 2020. I will do an understanding of what has changed from 2016 to 2020. I have a deep dive in terms of the guidance note. If the time permits, I will do it now. If the time does not permit, I might do another session, or depending upon however the Institute of Hyderabad branch will do on the guidance note. And a guidance note which is very, very comprehensive. It talks about considerations. It talks about procedures. So the audit considerations for each of the clauses have to be looked at. Against each of the considerations, you need to carry out what is called the audit procedure. And all the audit considerations and audit procedures forms part of your conclusion as part of the documentation. So you need to look at from the guidance note, which is very, very detailed. Let me see if I could cover some of those aspects as we discuss about. Now, as you're aware, we started with the Manufacturing and Companies Order 1975. From there, it got evolved to 2003 Companies Auditors Report, then the first CARO under the 2013, then the 2015, and now the 2020. What's changed? If you really see, not much has changed between what was there in CARO, what came back as CARO, and what is right now being reported. Now, this is basically to avoid a financial wheeling of the transactions. In other words, you would find information relating to Benami transactions. You will find information relating to the rollover of loans and advances. You will find information to whistleblower complaints. You will find information relating to income tax service. Just look at all of these. You will find information relating to related party transactions. All of these would have a significant impact as far as the reporting is concerned. In the earlier period, you used to have a CARO for only a fact finding. Today, CARO is beyond fact finding. That means if there is any of the subsidiary auditors, and if you are issuing a consolidated financial statement, if any of the subsidiary auditor has issued a modified opinion as far as the CARO is concerned, it is a responsibility of the group auditor or the parent auditor to include as a part of it. So now the responsibility also gets enhanced. So therefore, for us, for you, as a process, our understanding of CARO 2020 assumes importance. Now, if you were to address looking at this, why are these coming through? Many of the recommendations that have been brought in has been brought in because of ROCs, because of shell companies, because of the fraudulent transactions that are happening, because of certain audit procedures which the regulators believe has not been complied with, because of the representations by the industry and the bankers. All of these has cumulated. Now, all of these have cumulated, it's fine. But who are the people who are lending to the company? Who are the people who are overseeing this company? Who are the people who are supposed to have an oversight as a regulator? At all these points in time, none of them really awaken themselves. They only have a tick in the box. But suddenly there is some sort of a fraud or a mismanagement. The onus lies on the auditor. And therefore, in the earlier period, you only had the 143.12, which you had to include during the course of an audit. If you have identified anything in the nature of a fraud, then if it reaches a limit of 1 crore and above, then you have a reporting responsibility. You may have the similar one even now, but they have now removed the manner it is on the offices by the company. They have made it comprehensive. That means even if there is a transaction which is fraudulent within the creditors or by the company, even those gets reported by the company and becomes the responsibility of the auditor. And it is very important. As we evolve into this CARO 2020 journey, it is also important for each one of us to understand and appreciate. No longer you can just say the company has carried out a physical verification of fixed assets. Based on the verification, there's no material discrepancies. Now they've introduced a concept of internal controls, maintenance on the maintenance of the records itself, and as I touch upon as we go through the whole of this process. Applicability. They made sure this applicability is far-reaching. In fact, if you would be surprised, the guidance note on the borrowings, if you really see, the applicability is as much every company would get included, barring those exempted in the category. But if any of them is on a private companies, more likely than not, they would get included. This was supposed to be implemented for 1st of April 2019. It got deferred. I don't really see a reason why this would get deferred again to 2021, unless there is something like the GST or something where each of those deadlines goes on shifting, including ROC. But here the responsibilities of the auditor, and therefore, unless there is a representation which goes through it, unless we believe that it should be done, I don't really see a reason why we should have this deferred to another year. Now, this is applicable to all, including foreign companies, which is defined under clause 42 of the Section 2 of Companies Act. Branches of companies, including foreign branches, where unless the company is itself an exempted, the project office of the license office established outside of India, to where this company, the CARO, is applicable. Not included banking company, insurance company, Section 8 company, one-person company. And if you were to look at small companies, if you look at private limited company, they've used a language called not more than 1 crore of the paid up capital and reserves and surplus. They've defined what is reserves and surplus. They've defined what is paid up capital. Does not include total borrowings. They've defined what is borrowings included, more than 1 crore. They've defined turnover or a revenue that includes the revenue from the discounting operations exceeding 10 crores. Now, look at all of these. The manner in which it has been put, you will find that majority of the companies, you would have a responsibility to report. Now, when does a private company gets exempted? Only if all of these 3 conditions, which are called the inclusive conditions, are satisfied. Unless this is satisfied, this will not go through it. Now, let's look at some of these, the way they've included paid up capital. And if you look at paid up capital, unpaid shares or uncalled shares are to be deducted. Share application money is not included. Convertible shares only when actual shares are converted are included. Forfeited shares should be added up. All of these gets as a part of the paid up capital. And if you look at reserves and surplus, they've included everything: capital redemption reserve, securities premium, debenture redemption reserve, revaluation reserve. All of these will be included as a part of it. In other words, what you'll find that it is actually a net worth minus whatever is excluded that would get included as a part of it. For instance, if you're in an index regime, probably the effective portion of the cash flow hedge or the exchange difference arising out of a translating of a subsidiary financials may not really appear in it. But otherwise, private companies more likely than not would need to get included. Now look at this in terms of borrowing, and this has been enhanced. If you look at borrowings, now they've included long-term, short-term, they've included demand loans, export credits, cash credits, overdraft facilities, bills purchased or discounted, everything. Even the contingent liability in respect of where a BG gets invoked also gets included as a part of the outstanding borrowing. And we are talking about 1 crore at a point in time. You don't have to have the outstanding. At any day during the financial year, you need to get included. Even the current maturity of the long-term debt is included as a part of the borrowings, and therefore, whilst you might escape, let's say on a paid up capital, whilst you might escape on a turnover, but if there are borrowings at more than 1 crore, then you will more likely that this CARO gets implemented. Now, very important. Is this an investigation? The answer is no. This has to be covered as a part of the audit. This is in addition to the audit of financial statements, would require specific audit procedures to be planned. Now, why do I say specific audit procedures to be planned? Suppose you are auditing a property, plant, and equipment, you could probably include the additional informations that are required to be included as a part of the reporting on fixed assets, which was the earlier CARO. Now it's called the property, plant, and equipment, because of the change in the accounting standard description of the AS10 or the Ind AS 16, because of which it gets included. Now, why this is required? This is also required because it needs advanced planning. Why I'll say this requires advanced planning? If you find many of the loans that you will find in appearing either to the subsidiaries, either to the joint ventures, or to the related parties may not get repaid. Now, the reporting requirement, which is as a part of the new CARO, requires you to go and report on the nature of the loan, the relationship, when the loan was given, what are the terms of payment conditions, what is the loan payment interest that you're charging, and what is your borrowing limit. All of these gets included. And therefore, this requires sufficient advanced planning, because many companies, if you were to see their balance sheet on the loans and advances, on the other current assets, you will find many of these monies are sitting as amount to be recovered from them. And therefore, this is where you need to start educating. This is where you need to start engaging with your client. Most important is, while we do take the management representations on the financial statements, we do take management representation on the internal control of financial reporting. It is now important. This is the first time where you're going to get included under CARO what are the representations which are required. And these representations alone could be very, very comprehensive. The other point that has been included is on the materiality, and materiality is in the planning and performing an audit. Now, materiality is in certain cases, let's say if there is a reporting requirement of a consolidated audit or a subsidiary auditor, there is no materiality to be included. But materiality, if you define saying that this is not material, you need to document the reasons why this is not a material item, and that should form part of your rationale in the work papers. Now, you don't necessarily to do all the materiality from a consolidated purposes. This materiality has to be restricted on a standalone basis, and it is very, very important. Let's do a broad analysis between CARO 2020 and CARO 2016. Now, if you were to look at the number of clauses, even during CARO time, even during at one point of CARO, there were 21 clauses. But if you really see CARO 2020, it is not 21 clauses. With the sub clauses, it will be approximately 47 clauses we are talking about. It's a huge number. They have just clubbed it. If you were to look at some of the clauses, they have actually modified 10 clauses, they've removed 11, they've continuing with 4, they've removed, they've reintroduced 2, they've added 5. So they went on changing. So therefore, whatever is the CARO that you have in the previous period, please do not cut, copy, paste. And I'll tell you why this, I'll go through step by step as to why that is very, very critical. But if you were to look at from an overall concept, approximately 47 clauses, including sub-clauses, may require to be reported, while the fundamental for any auditor, the number of clauses looks to be only 21. So somebody were to ask how many you added, 16 plus 5, 21. That's all they're going to talk about it. So let's look at which are the ones which are continuing, and look at what are the things that have undergone change. Let's look at what are the things which got new clauses and got introduced, and let's look at what got included. Now, one of the things which got removed was on managerial remuneration. Already the managerial remuneration has to be included as a part of the statutory audit report itself. So therefore, they thought that this is a duplications, and therefore they should not look at it. Now, some of the clauses which are continuing, because from a related party transactions, loans, investment guarantees and securities, maintenance of cost records, non-cash transactions, which already were there, are continuing. There are certain things which have undergone change. Property, plant and equipment earlier was fixed assets. Now they've also included intangible assets, and I'll touch upon what are the changes that have come in intangibles. They made modification in respect of the inventory clause. Earlier it was a physical verifications. Now they talk about the reasonableness, they talk about the loans, they talk about the returns. The other aspect of it has got with modification of the repayment of loans. Now you need to identify, is it an evergreening of the loan account? All of these acceptance of deposits have undergone change from real return of deposits to deemed deposits. There is a new concept called deemed deposits. Default in prepayment of statutory dues has undergone change. It talks about the reasonableness. You need to look at each of these aspects more closely. Default in repayment of loans and borrowings has undergone change. You need to bring they've brought in the concept of willful defaulter as a part of it. Application of funds have undergone change. It talks about whether the short term has been used for the long term purposes. They're brought in respect of it. Reporting of fraud has undergone change because now they talk about the remote on the company by the officers on that. So they have brought in, enhanced the scope of the fraud. Nidhi companies have definitions have undergone change because of many of the NBFC issues. They have re-brought in. Registrations, RBI has undergone change because of the introduction of the CIC. So there are various changes that have been come up with modifications, and you need to look at much closely. Now, what are the new clauses that they brought in? Now, very important clause. That's a transactions not recorded in the books of account. Significantly, if there are any search, either the search arising during an income tax rate or the search arising due to a GST, and you find yourself that you've signed those accounts and you find that these transactions have been offered to tax, and they say that these transactions have not been recorded in the books, that becomes a significant challenge. You have to look at it from a perspective of whether this is a reporting responsibility under 143.12, whether there is a significant control deficiency when you're issuing an internal control of financial reporting, or you should evaluate from a prior period assessment under the old standard and under the new standard whether you need to restate. So these are some of the things which will have an impact arising out of transactions. Internal audit system. Earlier, you just used to have a one simple sentence of internal audit, whether they are commensurate in the size and the nature of business. Now, internal audit, you need to have a discussions, you need to look at the observations, you need to look at the deficiencies, and then start reporting. Cash losses was not there. Now, why this is very important? Now, the cash losses is not only of the current period, you also shall report of the preceding period. So therefore, that is the reason why this year becomes very important. Statutory auditor resignations, no longer you can go back and then accept any audit engagement on the last day or the last week or any of that matter. You cannot no longer accept it if any of the reservations that have been put. Let's take the case of even on a joint audit. One of the joint auditors resigns. You can't just accept because you're a continuing auditor, you know the company. You need to go back, reason it out, and then include that as a part of your reporting responsibility. Just look at it. I'm taking and said, I'm satisfied with the auditor, joint auditor who's resigned, and therefore I'm satisfied with the procedures. You are going to take more responsibility if you're not going to do additional procedures which resulted in the resignation of the joint auditor. So therefore it becomes important. The other important, very important clause is the ability of the company to meet its liabilities. Now just look at this. You can't just go through by a liquidity ratio or a current ratio. Now you need to look at that whether the company has an ability to repay its liability. How will you do it? You need to look at the projected cash flows. You need to look at the receipts that are going to come from the customers. You need to look at the prepayment. All of these gets included. The CSR is another favorite subject now because there is more and more focus coming through in CSR. Unspent money, whether not complied, needs to be reported, and the references of the negative remarks that's got included. Just look at the enhancement. This per se alone is an additional work, which actually they are said this is by itself a separate work. Now, suppose if you have to go and assess ability of the company to meet its obligations, or whether the cash losses have been in, or a repayment, these by itself becomes an area of expertise which you have to look at it, and probably you can support yourself as a professional. Managerial remuneration, as I discussed, has been removed. So if you look at the sub clauses and the amount of sub clauses that have been added during the period, this earlier sub clauses in property plan agreements were 3, now addition is 2, overall sub clauses become 5. Inventory has been gone up to 2. Repayment of loans has gone up from 3 to 6. Clauses remain the same, there's no change. Acceptance was reported remains the same with modifications. Defaults in payment of statutories remain same but with modifications. Transactions not recorded introduced in 2020 is a new additions. Defaults in the repayment of loans or other borrowings, this is a very important aspect of it. They've added 5 sub clauses, now it is about 6. Application of funds rates, it's 2. Reporting of fraud, now it's gone up by an additional 2, it's 3. Nidhi company, it's 3. Related fundraising, no changes. Internal audit systems, they've added 2. It's quite significant. Non-cash transactions remain same. Registrations with RBI has now gone up by 3, it's 4. And cash losses is being added, which is reintroduced from 2015. Now, if you look at the resignation of auditors is introduced, ability to meet is introduced, transfer of unspent met introduced, negative remarks included. Now, just look at the sub clauses where 21, addition is 28 with a deletion of 2. Overall, we are talking about 47 clauses. There has been mergers of clauses up to 2016 to clause 10. So there will be some changes, what has been done. So you could see in terms of my presentations that while they might have a little sequential challenges, but the matter is I'm just restricted myself to CARO 2020. But you need to understand that we are talking about additional 28 sub clauses, which is completely new and which requires significant attentions and contributions by the professionals. So let's look at some of the key aspects of the clause by clause. Now I have done a presentations which will now talk about clause by clause. Then I have a presentation which will talk about the guidance note. I will try to cover as much as possible in this itself, in the paucity of time. Otherwise, I will also cover each of those clauses. I will go slow by slow, ask as many questions as you want. More than happy to deliberate as we go along. Now, if you look at clause by clause, now the first important, why I said this is very important that you need to understand whether the company is maintaining proper records. Now, proper records have not been defined. Now, they talked about quantitative details and situation of fixed assets. Now, if you look at quantitative details and fixed assets, there is a detailed guidance which has been issued by the institute, and I'll touch upon as we go through that process. Now, if you look at it, the fixed assets have now been changed to property, plant, and equipment. So that is number 1 change. Number 2 change also what they brought in is whether the company is maintaining proper records showing full particulars of intangible assets. Intangible assets was not included in the earlier period. Now intangible assets have been included. Now, intangible assets, just imagine you're the owner of it. So you need to go back to all the Intellectual Property Rights Act and see whether you have a right over the asset. And this becomes very, very important. The other aspects which has been included, whether these assets have been physically verified, any material discrepancies have been noted. Now, there is a comprehensive analysis about what is a reasonable interval. Is a reasonable interval whether it is 1 year, 6 months, 2 years, 3 years, all needs to be defined. And that's where I'm trying to bring in about the internal controls that the guidance notes talks about it. So this is one change that comes through it. The other change that has been brought in is the title deeds of properties, whether held in name, and give the details thereof. And many times you say that it is in the name of the company, wherever information is known, the company is in the process of obtaining. Here they have defined it. They've defined whether the title deeds other than which are on leases are duly executed, disclosed in the financial statements, are held in. Description of the property, gross carrying value, held in the name, whether promoters or relatives are involved, period to indicate where it's appropriate, reasons for not being held in the name of the companies, if there are any disputes to be included. Just look through all of these aspects of it. You are bringing in, so many times what happens is when there is a conversion of a partnership to through, let's say, chapter 9, earlier chapter 9 to a company, a joint stock company, or in many times, whenever companies form, they will transfer the assets without transferring the name. And this becomes very, very essential because the charge can't be created. You can't create a charge on the company or the loans that you've taken if the property is not in the name of the company. And I think this is the reason why the representations from the banks have been considered. Now, the other aspect of it which has been brought in is in respect of the revaluation of the property. Where there is a revaluation that has been carried out by a registered valuer, again, registered valuer, you have to go back to the Companies Act, you have to go back to the resolutions, you have to go back in the AGM and see whether appropriate resolutions have been obtained, whether a registered value is registered, and if there are changes in respect of more than 10%, those needs to be brought in. Important aspect of it, which has been talked about, in the income tax, the direct taxes, you would have heard about the Benami transactions. Now, the issue is in this reporting is not whether you have got a Benami transactions on your name. The issue here is if any proceedings have been initiated. That is what is very, very important. It is not that you're holding a Benami property. Suppose you have no information with your holding and there are no proceedings. Probably you might say there are no proceedings or any actions are pending against the company. But if there are, then you need to bring about all of these details. So from a Benami transactions perspective, it's only when a proceedings have been initiated or any of the proceedings are pending against the company, only then you will be able to include that as a part of the process. That was on fixed assets. And as we go through the audit considerations and audit procedures, I'll touch upon more details as to what additional audit procedures that you need to include when you're dealing with CARO 2020 clauses. The other important aspect was on inventory. Now, inventory, invariably, we always used to write the company has carried out in regular intervals, no material discrepancies noted, and therefore they have been property debt. Now, you need to go by category by category. What does mean by category by category? Suppose you classify inventory as raw material, work in progress, finished goods, stores and spares, consumables, whatever by name. Now, whether physical verification has been carried out and which you believe the coverage and the procedure by the management is appropriated, and if any discrepancies, 10% or more in aggregate for each class of inventory, it is very important to note it is for each class. It's not the overall inventory. Suppose you might have a raw material which is very, very significant, constitute 90%. And let's say finished goods constitute only 2%. The 2% of that class is, let's say you find discrepancies, that is what requires to be reported also. So it is not the overall inventory, but the each class of inventory, that is what you need to address it. This is one aspect of it which has undergone change. Now, reasonable intervals, you could have a one-time verifications, or you could have a continued periodic verifications. You have to look at each of these and which, in your opinion, whether it is appropriate is what you need to address it. The other aspect of it which needs to be included and which got introduced in the current year is in the manner of the company having been sanctioned working capital. Now, look at this. You will be sanctioned working capital. You don't have to withdraw or utilize the working capital. If the company has been sanctioned working capital limits in excess of 5 crores, so 5.01, right? Then in aggregate from banks, so in aggregate, it is not from one bank. Let's say I've got banks, financial institutions, everyone should be added on the basis of the security of current assets. Pari passu clauses, whichever are included, you need to then address whether the quarterly returns or statements filed by the company with such banks and financial institutions are in agreement. And that's where they are talked about in September. 2 quarterly information should have already been submitted to the bank. You wouldn't have even started the audit for 2019. Let's say you're still in progress because the company has got an extension till December. Now look at through. If you have any of your clients have got a sanction, it's not whether the company outstanding is 5 crores. No, sanctioned working capital limits in excess of 5 crores for each of those returns in aggregate. And this is all in aggregate. So you'll have a UPI bank, let's say you have an HDFC bank, you could have a financial institution, it could be anybody, HDFC, anybody, all in aggregate in more, and which is against the stock statements. You need to compare that with the books and look at the responsibility that you have in respect of that. Next, whether the company has granted any loans, secured or unsecured, to companies, firms, limited liabilities, and other parties covered under section 189. Now we are talking about related party transactions, you're talking about loans. Now look at the way the loans have been included in this. Now, if you look at the loans, whether during the year, and you look at this number of clauses that have been included, whether during the year the company made investments in, provided guarantees or securities to any loans in the nature of loans, secured, unsecured, to companies, firms, limited liabilities, partnership, or any other parties. If so, then there are conditions. Whether during the year the company has provided loans or provided advances in the nature of loans, or stood guarantee or provided security to any other entity. This is not applicable to finance companies which are in the nature of giving loans. So on to the NBFC. It is applicable to other than businesses which do not provide, their prime business is not giving loans. The aggregate amount during the year and the balance outstanding at the balance sheet with respect to such loans, advances, guarantees, securities to subsidiaries, joint venture and associates. Now, all of these have to be captured in a tabular form and provided. The aggregate amount during the year and the balance outstanding at the balance sheet with respect to such loans or advances and guarantees or securities party other than subsidiaries, joint venture and associates. So therefore, you classify and categorize between your own companies which gets consolidated and those which are other than your subsidiary, joint venture and associate, which doesn't form part of consolidation. All of these information should be provided. That's number one. The earlier clause was whether the terms and conditions was not prejudicial to the interest of the company. The same information goes through it, but here, whether the investments made, guarantees provided, securities given, it's much more detailed. Investments made, guarantees provided, securities given, and the terms and conditions of the grants of all loans and advances in the nature of loans provided are not prejudicial to the interest. Terms and conditions is different. Now you need to include both the balance sheet items as well as the off balance sheet items, because where do you find guarantees, where do you find security? These are all outside of your balance sheets. So therefore you need to include all of these to check then whether they are prejudicial to the interest of the company, and that becomes very, very significant. Look at the difference, because earlier we used to say, look at the terms, you used to get regular payment, everything is done. We say it's not prejudicial to the interest. That's one. The second aspect of it is whether the schedule of repayment of principal and payment has been stipulated, whether the repayments are regular. Now they've included loans and advances. That means everything they've included. Why loans and advances included? We talk about subsidiaries, we talk about joint ventures, we talk about associates, we talk about others also, other than included. So in respect of loans and advances, in the nature of loans, whether the schedule, it's not the repayment, it's whether the schedule of repayment. That means you need to bring down the details which are to be included, whether such repayments are regular or not. Now, earlier we should say, schedule of repayment, the company does not have a schedule of repayment, used to come. Now you need to emphasize in respect of the schedule of repayment has been regular and the receipts have been regular. That's number one. Number two, what they've included, which already was there, is about more than 90 days, right? If the amount is overdue, state the amounts outstanding for more than 90 days. This is something which is not significantly changed, remains same as the previous period, but they added some more. What are the things that they've added? Now, this is where our discussions with the client assumes importance. What are those? Whether any loan or advances in the nature of loans granted and which has fallen during the year. Now, you might say the loan has been given without giving a date. There is also a clause relating to it, but this is in relation to where the date has been mentioned. Whether has been renewed or extended or fresh loans granted to settle the overdues. So you might have somebody come back and say, sir, do one thing, let them issue a check, sir, today. After 1 week, after 1 month, they let them issue again a loan. This is where you need to address this. If they have settled and again a fresh loan has been taken, then you need to go and specify the aggregate amount of such dues renewed, extended, settled by fresh loans, and the percentage of the aggregate of the total loans or advance in the nature of loans granted during the year. Look at the total loans percentage. Suppose your total loans on your assets on your balance sheets is, let's say, 100 crores. 60 crores comes only in this nature. That means 60 crores is blocked. Anybody can say, oh, this 60 crores today we can't find out. But at least by this percentage, when you start bringing in that 60% of these loans are remaining outstanding, then it becomes very, very critical. So this is one introduction which you need to be very, very cognizant. Start early. That is the reason why you need to discuss with you. Now, where you don't define, where you have not defined a term, what should you do? Where you have not specified any terms or period of repayment, then your reporting responsibility specify the aggregate amount, percentage thereof the total loans granted, aggregate of loans granted to promoters related parties. So that means you're bringing in all of these and saying so much of money has been given to related parties transaction. So much related party transaction includes the subsidiary, joint venture, all of that. So much of loans have been given to promoters. All of these need to be given with a percentage, and that assumes important. Just look at this. One side of the balance sheet, there is borrowings. Other side of the balance sheet, you have loans and advances given to your related party. What sort of a business model do you have? That itself will demonstrate when you are reporting as a part of the process. Now, this is again more or less consistent with the in respect of the securities and all of this. In respect of loans and investments, where the provisions of 185, 186, which is again loans given to the director companies, are to be complied. That remains the same. There is no change. Now, what has changed is in respect of deposits. Now, look at the definition, what itself has undergone change. In case the company has accepted deposits, whether the directives issued by the Reserve Bank of India and relevant forms have been complied. If not, whatever it is. Now look at the change in the definitions. In respect of deposits accepted by the company or any amounts which are deemed to be deposits. So now they've included both deposits which falls under the definitions and also deemed deposits. It's a comprehensive list which is included. For instance, if you look at the Companies Act, if there are any loans which are given, or let's say if there are any advances received from a creditor for which there are no supplies, there are no disputes, and it's outstanding for more than 365 days, they are considered to be a deemed deposit. Or if you've got any of the share application money which has not been allotted within a stipulated period of 60 days and you don't refund within the next 15 days, even they become as a part of it. Or if you've got any capital advances which has been given, if it has not been included, all of these will be included as a part of the reporting. And this is the reason why it is very important that you go to the liability side of it, apart from what is included under section 73 to 76 of the deposits which are governed under it. Go back to the creditors schedule, go back to those advances, the debit balances of the debtors and the credit balances of the debtors, liabilities. Look at all of these and see what have been included as a part of the deposit. And this becomes very, very essential. The next clause talks about cost records. Cost records earlier was whether a cost record is maintained, remains the same. Our responsibility continues. Whether there's an audit report is there, it is not important. In respect of the statutory dues undisputed, it talks about regular including undisputed statutory, which includes goods and services tax, which got included as a part of the processes. So you need to include the extent of arrears outstanding as on the period for more than 6 months. There are huge guidances which have been given as a part by the ICI. I'll touch upon as we go along that. Now, where the dues or income tax or sales tax have been disputed, you need to include as a part of it a representation given to the concerned department, because the department has just raised a notice and you've given a representations. doesn't mean that is a disputed one. It is only a representation. Dispute is where you've returned to them and then you've disagreed with it, where you've paid a deposit of a 50% or 25% as the case may be. That is what gets as a dispute. Mere representations to the department will not be treated as a dispute. It will go to the undisputed and then should be reported there. What are the other clause that has been included? The other clause that has been included are whether any transactions not recorded in the books of accounts have been surrendered or disclosed as income during the year. Somebody might come back, sir, this is not, if what happens in the previous year, what happens in the early period? No. Suppose if any of the assessments of 2013-14 or 15-16 or 2001 or any other period gets settled in the current period, and that based on the assessment order, you find there is something which the company gone and said, I'm sorry, I've not reported, I've not disclosed. These becomes the unrecorded income. When you have an unrecorded income, you need to go and deal this in the financial statement. So therefore, your engagement with the company starts now. You need to ask, are there any such transactions which we need to report? Are there anything that you have received as a notice? All of these informations that you need to look at as a part of the process. Now, other clause change which has significantly changed is in the repayment of loans or borrowings. And why did the bank go overboard on this? The bank also wanted to include that willful defaulter list which is available with CIBIL. So they are trying to bring all of this. Whether the company is defaulted in repayment of loans and in respect of borrowings, in respect of principals, in respect of any interest in this format. The format has been given this time. Earlier there was news, there never used to be a format. Now you have at least have a format. Now look at what are the things that they have included. And this is comprehensive. Why is this comprehensive? Because it talks about whether the company is declared as a willful defaulter by any bank or financial institutions. Now, you may have other banks' transactions going well, but some other bank or somebody has said you are a willful defaulter. How does this impact? The company might represent we had a dispute with them, they have not agreed, and then therefore they've considered as a willful defaulter. Now, bank's financial institution is fine, but let's say there is a creditor who is given money, and he goes to the court and says, or he goes to any arbitration or any other place and says, you are a willful defaulter. He gets through a sanction. That becomes a significant aspect. That's number one. The number two, which it is always, is overlooked while we do issue certificates for the term loans received, drawn by the company. We'll say, whenever the term loan is drawn, there is a CS certificate goes, the CS gives a certificate saying this for the purpose. Now look at from an auditor's responsibility. Let's say you are not involved in the issuance of a certificate. Now I'm giving you two scenarios where you are involved and where you're not involved. Where you're not involved and you find that the term loans that have been taken has been diverted. That means you have taken to acquire a plant and machinery because you had an urgent need you have utilized for working capital. Okay. So is that a diversion? The answer is yes. Now the person who has issued a certificate, because for draw down the loan, said that the company has issued as you use these funds for the purpose for which it has been taken, and there has been no diversion. This is where you need to be very, very careful. Now, one of the aspects when you if you're not a statutory auditor of the company and if you're issuing a certificate, please engage with the statutory auditors to make sure that these informations are collected, look at the controls and all. Let's say second scenario where you are the auditor, you've issued a certificate. Now, based on your applications, then you find that the short term has been utilized for long-term purposes, or you've utilized the term loan for cash flow. Now, you already issued a certificate. What is your responsibility? You have to go back to these people and come back and say that whatever the certificate that you've issued may not be appropriate. So therefore, when you're looking at CARO, and if you have given an observation, go back to the certificate, whoever has issued, whether you issued by you or by any person, look at if there are any inconsistencies. This number two. Number three, whether the funds raised on a short-term basis have been utilized for long-term purposes. Now, somebody might say short-term for long-term purposes, how do I do it, sir? We can go through a cash flow, or they have a detailed, cash book where we can go through it. This requires an exercise to be carried out. Now, for which the company may not have systems. So it is now that you have to engage with the company to go back and say that these are the information that you need to collect on an ongoing basis. So, because if you have to go back and they say everything is merged, sir, we maintain only one bank account, every funds fall here, it's very difficult, the volume is very, very high. When it comes to your reporting responsibility, you may probably have to disclaim saying that we are not in a position to identify because the company is maintaining. Will that have a challenge on you? The answer is yes. Because it might have a situation where they've used a short term for a long term purpose, or they've taken a loan which should have been applied for something else, have been applied for some other purposes. So this becomes very, very critical. Now, what is the additional clause that they've brought in? Now, this is very, very interesting clauses they've brought in. Whether the company has taken any funds from any entity or a person on account or to meet the obligations. So you are a very, very cash rich parent company. You had a subsidiary, you had a joint venture, you had all of this. So what you did, you took a loan. That loan, you went and gave it to your subsidiary, associate, and joint venture. So far, this was not reported. Now you need to start reporting whether the company has taken any funds from any entity. So it is not only loan, or a person on account of, or to meet the obligation of its subsidiary, associate, and joint venture. State the information of such transactions in each of these cases. That's number one. But they've also taken other one. So what do? Not only that you take a loan on your name, on your properties, you also take loan interest by pledging the securities of the subsidiary joint venture. So if you have that situation, if you really look at it, when you look at borrowing schedule, I don't know how many people go through carefully when you have to give the covenants in the financial statements. You say when you define a secured, in the secured you have all of this information which is carried. Present, past, future, assets, first time, pari passu clauses, promoters pledges, subsidiary pledges, all of these, which is never normally looked at. Now you have to bring in as a part of your auditor's CARO's report. Whether the company has raised loans during the year on the pledge of securities held in its subsidiaries, joint ventures, or associates. If so, give the details. And if the company has defaulted in repayment of loans, also provide details. Now look at this. Not only your loans which you have defaulted, you have raised loan on the pledging of the securities, and if you've defaulted that, even that you need to include as a separate clause. Just look at it. The fine print looks to be same, but you have a more reporting responsibility. Now, the other aspect of it which has been brought in, which again, this is the monies raised by way of initial public offer, after loans raised, where it's been applied with delays. Now, look at all of these. If you have raised a money and you have not allotted the shares, even that is considered to be a default. And if there's a default, you need to provide these details. This is what needs to be included. Similarly, in respect of if there are any private placements, if you have raised funds, if you have not utilized, even that non-compliances have to be given. So look at, for term loans you had, for your initial public offer you have, for your private placement you have, preferential private placement, debentures, everything. Optional also is convertible, is also included now. All of these are included for if you have raised funds and not utilized for the purposes you need. So that means you need to go back to the company, ask the company to maintain registers for each of this account. How do you distinguish it? If you say everything is maintained in one account, it's very, very difficult. So therefore, what you should say that for each of the accounts, wherever you're raising funds, you need to capture that information and how you're utilizing for purpose. And that is the reason why your work also would get enhanced. The other aspect which has been included is whether the fraud by the company or any fraud on the company. So the by the company or on the company. So they were there. Now what they brought in is whether any fraud by the company or any fraud on the company has been noticed. Look at this change that has been brought in. whether any fraud by the company or any fraud on the company, by its officers or employees. 2, whether any fraud by the company or any fraud on the company has been noticed or reported. That means even within a fraud taken place by a creditor, with a creditor, even a fraud taking place in a debtor, even a fraud taken place in respect of an employee settlement, even if a fraud taking place in respect of any of the commissions or sales, anything will all get covered as a part of it. Even in respect of false representations that you made to a bank or a financial institutions, you need to get included as a part of it. Whether any report of subsequent has been filed in respect of auditors, and whether any company has considered whistleblower complaints, all of these needs to be included as a part of the AD4 talks about each of these. Now, the managerial remuneration has undergone change. This is no longer in the Nidhi company. Again, this has been brought in because of the failure of the NBFCs in respect of 1:20 ratios. The maximum that they can draw is only a maximum of 20%. Whether there have been a default, all of these gets included as a part of this. The other aspect which have been included is in respect of section 177, 188, which again on related party transactions have been included as a part of the disclosures. Now, another change that have been brought in CARO 2020, which was not there in 2016, was in respect of the internal audit, whether it's a commensurate size and nature, whether the reports of the internal auditors for the period under audit was considered by the statutory auditor. Earlier, we used to say these have been carried out, we have not relied on the work of the auditors. No, you now have to start discussing, deliberating. If there are any issues that need to be reported, has to be reported. Non-cash transactions was there in the previous period, similar to carries out. Registration with 45(1)(a), which talks about the value. Every company has conducting any NBFC should hold a valid certificate of registration. You need to look for that. Core investment companies have been defined, which was not there before, which of assets, more than 60% of revenue needs to be looked at it as a part of it. So it is not only one CIC, but you also have to look at how many CICs are there within this group. And this core investment, because what used to happen is, this generally happens for many of these real estate companies where you have this, the land ceiling. So many companies goes and holds this as an investment with only in the equity, and more than 90%, 60% are in the equity. Those will be categorized as a part of the core investment company. The other aspect which has been included is about the incurred cash losses, not only of the current year, but immediately preceding financial year. So therefore, you report on 2021 as well as you report on 2019-20. So therefore, that's the reason why it is very, very important. One other aspect that has been included, whether there has been any resignations of the statutory auditors during the year. If yes, what are the considerations that have been objections raised by the outgoing auditor? That means if you're accepting an auditor and an auditor has written that the company is not in a position to provide all this information, there are significant internal delays in carrying out the audit, there is information and internal control weaknesses, deficiencies noted, all of this. Now you step in as an auditor and say, okay, no problem, everything is fine, send out a certificate saying that we have been appointed as auditors, we want to carry out. Answer is no. You have to go back and take all whatever he has filed to the register of companies, pull out all of these, and then come back and say, if he has said, if the other firm which has resigned say that internal control deficiencies, how did you complete the internal control deficiency within 2 months or 3 months? How is that you found information more different from the others? The responsibilities comes back to you. So for all those auditors who go and accept audit after the year end, this becomes a challenge. And especially will be, if it's normal, let's say he's resigned and you've gone through, you have no problem. Let's say he tenders his resignation saying that because of low fees, because of anything, that's fine. You've considered it. But if he writes, or if the firm writes saying that because of a deficiencies, because informations are not flowing, because you've represented the audit committee and they've not come back to you, then that becomes a serious issue for the incoming auditor, because the incoming auditor has to take consideration for all of these issues. The most important aspect of it is now the financial ratios. Now, the financial ratios, you need to go back to your capital budgeting times, go back to your original time, go back to your project financing time, where you are very good in preparing an Excel-based financial ratios. Now, look at the analysis that you have to do. On the basis of financial ratios, aging, expected dates of realization of financial assets, and repayment of financial liabilities, other information accompanying the financial statements, auditor's knowledge of the board of directors and management plans, whether the auditor is of the opinion that no material uncertainty exists as on the date of the audit report and the company is capable of meeting its liabilities existing at the balance sheet date as and when they fall within a period of 1 year from the balance sheet date. Now, in other words, let's say you have qualified a going concern, because in a going concern, whether you're qualified or whether the financial statements have been prepared because of this thing. Now, wherever you bring attention to a going concern, how are you going to comment saying that the financial ratios are going to be good? The expected realization, would you not qualify this aspect of it? I think this assumes significant importance, because the material uncertainty, that means the material uncertainty which is associated with a going concern has been included as a part of the reporting under CARO, because your material uncertainty is only respect of preparing a financial statements on a going concern basis. Material uncertainty is not in a repayment of a loan, and that assumes significant importance when you are dealing with this. So if you have a going concern issue, if you have a cash flow issue, cash losses, the company is not in a position to meet its suppliers, its company is not in a position to meet its financial obligations. How are you then dealing with these aspects of it? And that assumes significant importance. The other aspect of it is in respect of CSR. If there are any unspent money to a fund within a period of 6 months from the expiry, whether there's been transferred to that fund, you need to report it. And this is very, very specific, because if you already have a project, it's ongoing project, you don't have to do it. But if you have got an amount which is unspent amount, which is outstanding for more than 6 months, you need to transfer to a fund. That becomes a statutory obligations. Whether any amount of remaining unspent pursuant to any on has been transferred to a special account needs to be looked at. And the last aspect of it which got covered, whether there has been any qualifications or adverse remarks by the respective auditors in the company's auditor's order, included in the consolidated financial statement, you cannot ignore. Now, somebody might say, sir, I did not even get the auditor's report. There is no CARO reporting. There's nothing there. Then you have to state saying that you, in respect of this company A's name of the auditor, that you have not received it. And that becomes important for you as an obligation. So it is not only the onus is on the principal auditor, the onus is also on the subsidiary auditor. Therefore, the subsidiary auditor should take the responsibility to, or the joint venture or the associate take the responsibility. This was what was on this clauses. So let me go back on to the clause-wise analysis. And this again, this clause-wise analysis is drawn from the guidance note issued by the ICI. Please take time to go through each of these guidance note. The guidance note is very, very comprehensive. There are study groups that have been formed from Kolkata, from Delhi, from Mumbai, from Chennai. They formed the study group. A lot of people were involved to bring in as much as detailed explanations. And they have brought in even the manner of reporting. They have even brought in what is defined as proper, not proper, what is material, what is not material. So let's look at each of these clauses. Now, when you look at each of these clauses, the clause 3, especially whether maintaining proper records, is maintaining of full particulars of intangibles, talks at reasonable intervals, title deeds. We have talked about all of this. I'm not going to concentrate on each of these names, but I'm going to talk to you about what are the changes that have been brought in, what are the audit considerations, and what are your audit procedures to be done. One, as I explained to you, the definition is changed from fixed assets to property, plant, and equipment. Invariably, we are used to cut and copy paste of the previous periods. Even during the CARO's time, Mahakaro time, we used to use the same thing. Please change this. Now, from this year onwards, you will start looking at differently. The second aspect that got included, as I mentioned, was an intangible assets. The format of disclosure of immovable properties have been provided. This is the format which is given. description of property, gross carrying value held in the name, whether promoter, direct or relative, period held, indicate range, whether appropriate, reasons for not being held in name, also indicate if there are any disputes. New requirement is, as I mentioned, is on 10% in each class to be required. New reporting is any proceedings against the company for holding Benami property. It is only if there are proceedings. If there are no proceedings, you will say there are no proceedings. How will you do it? You look at various notices issued, you look at various legal representations made, where advocates that the company has employed. Now let's look at the key considerations. Now, why do I say key considerations and what are the audit procedures? So you need to look at the key audit considerations that you need to look at it. One, proper records. There is no definition of a proper record. Proper record, somebody might say Excel sheet is a proper record. Somebody might say this is a proper record. Maintaining a physical document is a proper record. No. Now they have brought in certain aspects of it which you need to look at it. Proper record is what has been looked at it as a part of the process, including details and situations of property, plant, equipment. Now you need to look at which are the things. If it is property, plant and equipment, look at Ind AS 10 or Ind AS 16. Right of use of assets, Ind AS 116. Investment property is Ind AS 40. Non-current assets, which is Ind AS 105 during those regimes. You can accept an electronic form only if these two conditions are satisfied. Now look at this. Otherwise, you have to comment. Electronic form means Excel sheet, let's assume it's an electronic form. The controls and securities measures in the company are such, once finalized, you cannot change or alter without proper authorization. Is an Excel sheet a proper document, proper secure document? The answer is no. So therefore, if this condition is not satisfied, the conditions that they're not maintaining a proper records will come in. The property plan register should be such that can be retrieved in a legible form. You can't say, sir, if I take a printout, it will come in very, very, very small. That is not allowed. You need to retrieve in such a way that it is legible and you will be in a position to identify it. So therefore, what is very, very important, that you need to have these conditions satisfied. Only then you can go back and say the proper records have been maintained, especially for electronic. Manual, there is no problem. But for electronic, this is what it is. You could have situations, somebody might say, sir, there are assets, mobile assets keeps changing. You could have a separate track of movement of the changes that are coming through, and you need to look at all of that. You also need to give the location situation in which it has to be included. Now, one of the changes that come through it. Today I'm using my company's laptop. The laptop I'm talking about it. Has the location changed from the company to me? The answer is yes. If that is the case, then all those furnitures, all those assets which have changed and located in residential premises, the PP register should indicate the name and the person, the custody for what the assets are being included. Similarly, if you could have assets which you could have a common useful life, which could be grouped under one head, you could still do it. But when we talk about quantitative details, we need to go by the information. Land should necessarily include the survey numbers. Leasehold should necessarily have the individual leads property details. Railway siding, again by the length. Plant and machinery should be the mobile, immobile. Vehicles by the registrations. All of these, just look at it. Where the company does not maintain, you cannot keep on writing the company is in the process of updating fixed asset registers, as and when the physical verification is carried out, such discrepancies will be noticed, and therefore this better is. Year after year after year after year, we use the same language. Now you can't use the same language because now you need to give the quantitative details, you need to give all of this. So where a PP register by the company is not maintained, it's called a serious documentation control lacuna. That means even you are testing a financial statement, even when you're issuing an internal control of financial reporting would fail if this fails. Now, for an intangible, look at the documentation that you need to look at from a copyright act, from a patents, from a trademarks, from a design, from an information technology. All of these will be included as a part of, because you need to have a right. How do you demonstrate a right? Because you have self-generated assets. Do you have a right? The answer is no, unless you have a patented, unless you've registered, unless there's a trademark that you could use, unless it meets the condition of Ind AS 38, the definition of intangible assets, or the definition of AS 26 under the Indian GAAP. Now, key procedures that you need to be very, very careful. Self-generated intangible assets is permitted only to the extent that you can identify and classify under the Ind AS 38. Reasonable sufficient description should be there so that whenever you want to carry out an identification, you are in a position to do it. Location, agreement books, litigations, all of this, you need to look at it when you're reporting under this clause. Now this clause has been enhanced. Further moving, the reasonable intervals, you need to identify what you mean by reasonable intervals. You need to look at the procedures. You need to look at what are the instructions given to the staff, who are the staff who are, whether they are competent enough to undertake the physical verification. It can't be say, sir, if you tell me, sir, I will appoint somebody, he will do and put a stamp and give it to you. Today itself, he'll give you, sir. Absolute no problem. The guy will give you today. Yesterday he has been appointed. Today he'll give you a report. Now look at the internal control. Look at the verification. Look at the amount. Please do not accept any certificate, whether it's from your own chartered account known circles, that he has carried out a physical verification. You are satisfied with this physical verification, and therefore you as far as you are concerned, you're fine. Answer is no. You now need to go examine the competency. Now you need to go and examine your procedures. Now you need to go and have an interaction with that person and say whether that is reasonable or not. In every case, at least once in 3 years, you need to include. And these are basically your reactors, your large buildings, all of these lands which are way, way ahead, probably where you can't reach, probably you can do once in 3 years. However, the company should have on a regular basis to make sure, because when they have borrowed a loan, when they have done all of these, they would have submitted these documents to them. They would have had the encumbrance certificate. They've done all of these. Probably on a year-to-year basis, you may have to include as a part of the verifications. You need to look at the method of verifications. You need to look at the distinctive numbers. You need to look at the professional judgments. You need to look at the assets that have been included. You need to look at the materiality. You need to look at the material discrepancies when you're dealing with the physical verification of property, plant, and equipment, or the reconciliation of it. Just imagine, suddenly from nowhere, which was there as a part of our property, plant, and equipment under the Ind AS 16 or AS 10, or the manner in which we have to carry out an audit procedure under the standards of auditing, suddenly that this gets transformed into a CARO matter becomes significantly important. So therefore, when you're doing an audit of a financial statements, please include all of these. Today itself, you talk to the client and say, hey, listen, you've not been calling, you've not been carrying out, you've not been maintaining records. If you don't do it, I may have to qualify your fixed asset register. I may have to qualify your physical verification. I may have to qualify if the discrepancy is more than 10%. Materiality is something which you will look at it on an ongoing basis. Title deeds, you need to verify. You need to look at if those assets which are not included as part of the property planning, you don't have to do it, but you need to establish, you need to understand how the legal ownership has been established. You need to look at a detailed examination, especially of a partnership or a limited to amalgamation of a companies, because the properties normally takes time to get transferred. So these are some of the things which you should look at it. Now, one of the things many of the people say, sir, the property records have been destroyed and therefore we are not in a position to carry out. Now look at this aspect of it. If you have said that it's been destroyed, it is old, you need to first go and check whether there is an FIR that has been filed for such thing. If no FIR has been filed, you need to understand reason and get a representation and look at it whether that was appropriate. Now you have to also look at if there are any other ways that you could verify. You may probably go and physically verify. You may probably go to a regulator or an authority where you can go and cross-check, examine, or you can get a chartered engineer, verify this. All of these could get included as a part of this processes. Now, if there are any, you are not in a position to reconcile, you need to examine these records. All of these are very, very important. And if there is a dispute on any of the properties, you can't just write there has been a dispute. You need to seek, you need to talk to the person, find out what is the nature of the dispute. And only after you get all the supports of the disputes from the legal expert, only then you can include it. Just imagine the amount of work only because of CARO 2020 has gone up. And therefore, when you go back, this is exactly the same which we have been doing. There's nothing which somebody might say, sir, we know all of these. Now, you will write it and you will sign it as a part of the audit report. That's the only thing that has undergone change. So your CARO report will be much, much bigger, larger than your audit report itself. Revaluation of assets, upwards or downwards, is if it is more than 10% carried out by a registered valuer, please look at all of these. Look at the date of revaluation, name of the registered valuer, methods, assumptions used. These all should form part of your documentations. And if it is greater than 10%, this will have to be reported in the CARO. Benami transactions, please look at if there are any transactions which have been, proceedings have been initiated, and these are the information that what you would be looking at it, only then you will be reporting. If there are no such, then you don't necessarily have to report all of these. Now, the other aspect of it, somebody might say, sir, this has happened, we got a notice after the year end. What should we do? If you have received any notices subsequent to the audit period or the post balance sheet period, under SF 560, you need to consider this and include this as a part of your reporting. Similar to whenever there are any dues outstanding for more than 6 months, you go back and say, up to the date of the report, the company has made payments. So therefore, for the understanding of the bankers, for understanding of the regulators, hey, these guys are very, very nice guys. They have really paid the amount on time. But in such similar cases, when you find certain things which you come across, the company is not provided, but through any other source you've got this information, you may probably need to go deep dive and get this information as a part of the process. Why I'm saying this is very, very important is in this world of where there are multiple registration that could happen, genuinely or not genuinely, you may have a situation where your own property could have been mortgaged by somebody else. And that is the reason why it is very, very important that if it is encumbered, get an encumbrance certificate, look at the encumbrance certificate. If it is registered, go and seek for all the documents. If it is with the banker saying that they're pledged, please get a confirmation from the bankers. If the fixed asset registers are in an electronic form, look at the controls that you have to go through. If there is a revaluation, go through the process of revaluation. All of these needs to be looked at it as a part of the fixed assets. Working capital on the inventory, if it is only sanctioned is more than 5 crores that I've talked about. Threshold of 10% for each class I've talked about. You need to look at the procedures, the appropriateness, and the coverage that has been done. The reasonableness, and the reasonableness is what I talked about. You can carry out a periodic physical verification. You can carry out a continuous physical verification. So you can have any method, but that should be determined based upon the processes that are followed. Observation, again, if there are observations, you need to go back, check. Cutoff procedures, one of the key important aspect of is cutoff procedures. Cutoff procedures is not only for the auditors, cutoff procedures is also for the management when they carry out. Please go and check and evidence it. So you may want to participate. There are two ways you can do it. You can carry out independently the processes for a physical verification. You can also participate and understand. That doesn't form part of your physical verification. That forms part of your evidencing that the management has carried out. You're satisfied with the control. You're satisfied the instructions, and these instructions are in written instructions. You're satisfied with the knowledge of the staff which is carrying out. You're satisfied with the issues that have been addressed by through that processes. You're satisfied that the adjustments in the balance sheets, in the profit and loss account is more than not 10%, and they are adequate. Look at this control processes. Look at the procedure process. Look at the process in which their discrepancies or deficiencies have been identified, and then comment. So it will help you in your internal controls. It will help you in your financial statements, because you have to see a threshold if there are any discrepancies, the uncorrected misstatements or the corrected misstatements in overall materiality concept. It will also help you when you're dealing with CARO. Now, where the stocks are held by third parties, it is very, very important that you obtain confirmation. Where you are not in a position to obtain confirmations, you need to comment on that. You're not so much of stocks with the third parties, you're unable to comment on it. Now, let's say I take with third parties, let's say you're in a life sciences, or most of them are, let's say, with the third parties because they're intermediates, they carry out the inventory, they don't give you a report. You now come back and say, with the third parties, you're not in a position to comment on it. Just look at it. You said you're not, because they're not confirmed, you don't know whether they exist or not. look at the way they form substantial part of your financial statements. How are you commenting on true and fairness of the financial statements? And that is the reason why I'm saying CARO, today you have to look at in the context of financial statements. CARO, you should look at in the context of internal control of financial reporting. CARO, you should look at in the context of third parties. And this becomes very, very essential. Appropriateness, discrepancies more than 10%. Threshold on a net basis, you look at it, but each class of assets that you need to look at it. Common classifications, I talked about raw material, work in progress, finished goods, store space, and loose tools. Now, the other aspect of it is on the working capital sanctioned with reference to sanction letters, more than 5 crores. And if there are anything that relates to unsecured, you need to address each of this. So all of these gets included as a part of the process. Now, most important aspect of it, which you need to look at it, you need to obtain the statements that are submitted. Now, suppose the company comes back and tells you that this is what we have submitted. Is that a full proof? The answer may be no. So therefore, what you should do, you should get these confirmations from the banks itself and then compare with the books. That means you can't take the company's submission of books, returns, and the company's book and compare everything the same. Obviously, it has to be same because no company will give you any information which is not agreed with his books. Now, this is where you need to find out. You will write to the bank and find out what are the information that will please provide us a copy independently, similar to a confirmation. I compare that with what has been submitted by the company and as per the books, and you find you don't have to do a detailed examination. You have to only compare with the books and accounts. Now, tomorrow it might turn around that when you've done a physical verification, you do an adjustment and you come back and say, these are the discrepancies. Will you report back to the bank? Yes or no? The answer is you may have to report it. You may have to include it in your CARO. And that is the reason why it is very, very important that you educate your client that apart from the normal bank balance confirmations, now you're going to seek information relating to the returns that you file with such bankers. Professional judgment determining materiality and relevance of discrepancies is again the auditor's judgment. You need to use the auditor's judgment and materiality under the SA 230. Please, 320, make sure that you have all of that information. So in terms of the companies made investment provided and guarantee, let me go to the audit procedures. There are a huge number of items that are covered. What are the key considerations? Now this year, as I said, you need to include separately for subsidiary, joint ventures, associates, and others. Other than the principal business which is covered under Companies Act, you may want to, you might state saying that other than what it is there. But you need to assess all parties to whom the loans are given in which directors are interested. And it is amount of loans during the year that has been given. That is what is very, very important. You need to understand the controls and the procedures surrounding that, which could include whether the board, audit committee is approved, the board of directors, the board has approved, it's a pre-approval, is there a limit which is given? All of these needs to be included. You need to have the details of the parties, relationship, the parties, gross amount, and all. Many a times, the company does not disclose the related party. Because they always disclose related party, what is included on the Companies Act, they may not include what is under the accounting standards. Accounting standards definition on related party transactions is completely different. Because it deals to a person which is not defined under the Companies Act also will get included. So therefore, it is very, very important that you need to look at those parties, those transactions as a part of the process. You then need to look at the guarantees that are given in the register that if they have not maintained, you need to state that they have not maintained. All of these forms part of the processes. And how do you report it? You identify between subsidiaries, joint ventures, and others. And you give the guarantees, securities, loans, advance to others with all the information in this format. What are the key audit procedures that you need to look at? Determine whether it is prejudicial to the interest, look at the process of issuance of guarantees, look at the applicability, look at all rate of interest, security, and all of this. Now, what is very important here? You cannot give a loan or an interest much lower than the amount that you borrow from a bank or a financial. Let's say you borrow from a bank at 10%. You can't give a loan at 8% to your subsidiaries. And this becomes a very, very big, the prejudicial starts from here. So therefore, you need to be very, very careful when you're reporting on this aspect of it. This clause deals with the repayment of principal and repayment. The auditor has to examine the loan agreements, has to look at the agreed letters. Now, especially during the pandemic period, now given the Supreme Court order which talks about September 2021, look at how some of these aspects of it as we go along. Where there are no arrangements, you need to look at whether there have been a schedule of repayment. If there are no schedule of repayment, you need to comment upon. You're unable to find a specific comment relating to that, and that becomes very, very critical. More than 90 days, if they're overdue, look at the reasons for why they have been overdue, why there have been no repayments. Look at whether the schedules have been missed out, and then comment upon the overall aggregation of such amounts which have been given outstanding for such long periods. The other aspect of it which is covered as a part of it is in respect of the same parties. Look at examine the loans and agreements, dues as in balance sheet date, renewal, extended. That means if you have a rollover of such loans without doing a settlement, without doing any of this, this is what is called as an evergreening. Evergreening was there in banks and financial institutions. Evergreening is there even in the companies. It never used to be reported. Now you need to start reporting wherever you have given a loan or you've renewed, you have not even done anything, but you went on issuing fresh loans, and by closing the old loans, these becomes a significant aspect of it. Obtain a list of all the promoters related parties. Look at outsider books, look at corroborative evidences, look at the information that have been filed in the register of directors, look at the information that are filed with the register of companies. All of these you need to look at specifically and take that information. Compliances in respect of a loan, these are the additional information. Make sure that they comply with section 185 and 186. Go through in detail, similar to compliance in respect of deposits. Cost records, there are certain specific things you need to go through. For directors, go through form MBP 1 under section 189. Look at if there are any transactions which are in contravention of section 185 with respect to loans to directors. Report on non-compliances. If there are any loans given or guarantees provided in connection with for any securities acquired which exceeds the percentage of 60% of the paid up capital or 100% of the free reserves. Look at the layers of board resolution. Again, these are all under the Companies Act. I'm not going to it, but you need to look at if there are any defaults and the company is not been allowed. So these are some of the information you need to go through more in detail. Please download the guidance note issued by ICI. It is comprehensive. Please go through in detail, specific by line item. Now, the other aspect in respect of the deposits, you also need to look at the efficiency or efficacy of the internal controls, whether the company has accepted deposits within its limits. Look at all of these, whether there are any orders passed against the company. Examine, inquire, all of these. Look at all of these. Just don't accept what the company is saying. There are no returns of deposits, and therefore they are not included as a part of the processes. Look at the form DPT3 which is filed for the deposits. Look at the details of it. You need to understand the deemed deposit concept, and the deemed deposit concept is very, very critical. The deemed deposit concept is detailed right from even under the Companies Act to as much as the guidance note. Please look at each of even the security deposit which comes through it. Even if there are no security, if there are no work carried out for an amount received for a capital asset, if you have not done, that becomes in the nature of a deposit. Cost audit report continues to be the same. Written representations, you need to look at some of this and maintain regularly. You need to review the cost records. You need to look at it whether if it's been prescribed. Obtain a management representation. Now, this is a management representation letter which should be in detail, which you should be seeking from the company. Deposit of statutory dues, they've included the GST which is included. Look at each of these which are pending. Go through all the notices received which are maintained by the companies. Look at the transactions which are not recorded. Look at all of these aspects of it and see whether the company has carried out procedures in relation to in respect of it. And I'm telling you again, you have to look at the regularity. Regularity is in each of the aspect. It is not overall, it's not materiality. It is in each aspects of the statute under various statutes which have been followed. You should also look at the policies and procedures adopted to make sure that whether the company is generally compliant with these aspects of it. And therefore, for the auditor, there are about 4,000 and odd statutory compliances which needs to be compliant, various states, various regulations, various ESIs, and all of these. Look at each of this. look at understanding of each of the cases, look at whether they're outstanding and repayable, get a complete list. Unless you know which are the rules which are applicable, unless you have a chart similar to what you have for a GST, you may have a due date which has got extended up to September, you have got some got extended to November, some got extended to December. Unless you have any of these, you will not be in a position to address all of that. Disputed dues, it continues to, if there are any litigations, please look at the litigation, look at it, more of that. The other aspect of it, which is very, very important, is in respect of the statements of the survey, search and survey, not only relating to the earlier period. You need to go back and comment if there are anything which are very, very significant. Look at any assessment that are close subsequent to the balance sheet. Look at the issues which are remain still continuing. And if they fall under the reporting requirement of 143(12) of the Companies Act, please report that aspect of it. And you also have to evaluate if you have, whether you're going to disclose under the Ind AS accounting policy change, whether it will be a restatement, whether it's material, significant, prior period item, all of these needs to be addressed. Default in repaying of loans. This is a very, very important. You need to get a complete information relating to such defaults. Go and ask a complete schedule of repayments from the lenders. Please send out a confirmations from the lenders. Get a complete download of all this amounts that have been borrowed. Look at all the repayments that have been issued. Get an information of prescribed format. Send to the bankers whether there have been any default. Because default is not as much as you from your side. Default is as much as from the banker side. Get a confirmation from the banker that the state of the loans are there, no overdue positions. Get a confirmation saying that there are no such default positions. There could be disputes between the lenders and the company, but you need to start looking at and say, is it because of which there has been a delay? That forms part of your remarks column. This is the format that you will give in respect of it. If there are any of the bankers, or if the company has been declared as a willful defaulter, the willful defaulter is defined when you have defaulted in repayment of repayment obligations you have not utilized, or for specific purposes, you have siphoned off money, you have disposed of immovable properties. All of these comes under the willful defaulter, and therefore it becomes even one asset in a take a term loan. They have taken a term loan without even the banker's clearance. You went and sold that asset. Now, even that may generally form under the category of a willful defaulter. So that's the reason why it's very important. You obtain a confirmations from the bank and financial information and confirm whether the company has been declared as a willful defaulter. Just go to the bank and say, please let us know whether the company is a willful defaulter. First of all, the objections will come from the company itself. How can you write saying that whether I'm a willful defaulter or not? But very important, you also look at the CIBIL information, the Credit Information Bureau, which provides all of this. That is also a very good way to see whether any amount which is more than 25 lakhs, whether it has been considered as a willful defaulter. Probably you can use that information, whether it could be credit card, it could be anything else, where it is in the nature of a loan. Because today, some of the working capital loans are used through a credit card, because they give a sub limit through a credit card, and therefore they keep paying this. So if there are willful defaults, even that also you need to look at it and see if there are any show cause notices received. Now, repayment of loans, again, there is a definition of a diversion of funds. They have utilization of short-term capital income for long-term purposes. Again, this is very, very important. Earlier, this scope was not there. Now they brought in this diversion of funds under the RBI definition. So therefore, the diversion of funds, even a short-term to a long-term purposes, becomes what is called as a diversion of funds. So please look at each of these aspects of it more closely as we go along. You need to obtain sufficient appropriate audit evidence. Please don't just sign a certificate of utilization. Today the client calls up, tomorrow I need the certificate. Don't accept it. You please get an engagement letter if you already have. You don't have to get a confirmation from the bank, carry out all the tests, get the management representation. Only then you will sign this certificate. Otherwise you will not sign the utilization certificate. So compare the loan sanction, compare each of this nature, purpose, amount diverted, all this is what reporting requirement. I've been talking about it, but make sure that you adopt all of these as part of the purpose. Whether the funds utilized for short-term, long-term purposes, please look at more detail to make sure such things, including if there are any loans taken on behalf of these subsidiaries, please report all of these. So therefore, for each of these, you need to spend more time. Just imagine a company which has got, let's say, parent is 1, they've got subsidiaries of 20, they have a step down subsidiaries, they have joint ventures, and all of these you have to get this information. How much time you would require to report even on this clause. And that's the reason why this becomes a very, very good saleable point even for you if you're not an auditor of the company. Loans used as pledged or securities held by it, go get a charge certificate, look at the ROC site, look at the sites wherever the encumbrance, get an encumbrance latest one to make sure all of these charges have been validly created and that you've been able to validate as per the books and records and as per the security registers that have been maintained by the company. And this becomes very, very essential. Funds raised and utilization, I've talked about it. I'm not going further about it because it's, again, make sure that these are included as a part of the processes. Representation, taking end use of money, absolutely, when you have anything in doubt, make sure that you get into the disclosures. So if you look at it, whilst I know I do understand we are about at 7, almost like about 10 minutes, but let me just see if there are any specific things which I would want to it, but definitely from a perspective of funds raised, whether through a private placement, whether term loans, whether through an IPO, whether there will, all of these you need to make sure these gets covered as a part of the processes. Now, preferential allotment I talked about, again, these are the disclosures. Fraud, again, I talked about it. Again, as a company by a customer, vendor also required to be reported. This is very, very essential. Please make sure if there is any reporting responsibility more than 1 crore under the ADT 4, please ensure that you report it. There is a noticing is different reporting. So therefore it is notice. Notice means it has come to your knowledge, becomes notice. Reported is something which you do it voluntarily. That becomes a reporting. Key audit procedures, you need to examine the reports, talk to the internal audit committee, talk to the audit committees, internal auditors, talk to the audit committee, make inquiries. All of these needs to be looked at it. Frauds is a very big subject. I can discuss more on it, but it's very important that you be cognizant about the procedures that you need to carry out. And this is very, very critical. Now, see, we can always go back and say auditors are not bloodhound, right? Just imagine the way the regulators are coming on the audit firms is that they expect you to investigate all frauds. Now, CARO is one great example where you say all frauds. So therefore, if there is a GST which has been violated and therefore you get caught by claiming a wrong input, that itself has caused what is called as the loss to the exchequer becomes a fraud. So therefore, you have to be very, very careful. Income tax, you went and did a settlement and they came back on a survey and then you paid money. That also is a fraud. So just look at each of these aspects as part of the process. These are all something which is already there. Whistleblower policies, again, very critical as a part of Nidhi companies. Again, they can only borrow not exceeding 20 times. They have to report if there are any defaults. This I'm not going through it, but just imagine any defaults, repayment, movement in loans, all of these comes as a part of the processes that needs to be reported. For each of these, go through the audit committee, go through the board minutes. If don't be the auditor who prepares the accounts, don't sign saying the accounts have been approved by the directors. There are only 2 directors. You have to be having discussions with the management. Representation letters have to be open. It should be as detailed as it should be. Identifying related party transactions is a very significant SA 550. You need to deal very, very closely. Look at the procedures that you need to find. By how do you identify it? What is disclosed by the company is not related party. There are many things which are outside of related party. I'll give you one example. There are certain vendors from whom only you will buy. There are certain vendors to whom only you will sell, customers to whom only you will sell. You'll say, I will only buy because there's a proprietary. But if you go to if you do a search of all of these companies, there are many such companies will do. So probably that also is a one indicator that could be a potential related party who would be sitting somewhere there. You could be an ex-employee, could be a relative, could be anybody else. So all of these you need to start looking at as a part of the processes. Key consideration for internal audit, make sure you discuss with internal audit. Internal audit has to examine how did they evaluate the internal controls, how did they examine the financial operation information, how did they examine the operating activities, how did they review compliances, how did they evaluate. All of these, please discuss with the internal auditors. Make sure that you consider the report and then do an independent review Even you have to evaluate the ability of them to carry out the internal audit. So that also becomes very, very significant. Registration, I'm not going through it. Obtaining representations is fine. This core investment company, again, if 90% in assets, 60% in equity shares, automatically forms as part of the CIC. Operating cash losses, this is very, very important. Cash losses, again, has come back from 2015. Make sure that you look at each of these. Again, if there are an outgoing auditor, incoming auditor is coming, please make sure that it is no longer the same normal practice. You need to get all of these objections, everything issues raised as a part of the processes. This is reading minutes. Material uncertainty I talked about. SA 570, which is a going concern, get the budgets, all of these go through as a part of the processes. Make sure that you are adequately supported by all the documents. CSR is, again, you have, if there are any funds which remain unspent for more than 6 months, should go be fund, and all of this should get covered as a part of the processes. These are all provident fund and all professional judgments. If there are any adverse comments by the finally on by the any of your subsidiary auditor, please include as a part of the process, which needs to be included. So what is very, very important, whilst I've run through these slides because of the time, which you as Daya has said, as also Pankaj had talked about, we need to look at more by clause using the guidance notes. It is very, very important. But it is very, very important for each one of us. Now, no longer we can go back saying that we will give a true and fair view. Absolutely, the true and fair view has just disappeared. It is going to move towards what is called a true and correct. No longer we can go and say, it is not possible for the auditor to find out. Just imagine the amount of technology tools that are available to the auditors to do it. You have to speak the language of what is right. Otherwise, somebody is going to come back to us and say, what you've spoken is not right. And that is our protection, is the manner in which you carry out an audit procedures, which is much, much more robust than what we do. Please do not accept engagement. Please do not sign certificates. Please do not sign engagements which are closer to the board meeting. Please do not compromise on those aspects of it. This is very, very essential. Thank you very much. I do understand it will be long, but any questions that I have, I'm more than happy to share. Over to you.
Yeah, thank you, Ganesh bhai. Yeah, there are 11 questions. Itna sune baad, just to make it later. कुछ ले दे के adjust हो सकता है क्या?
भाई आप ले लो अभी, आप ले लो, देगा regulator बाद में. आप अभी से ले लो, कुछ कोई problem.
I don't know. Ganesh, really, when it's audit is now, we can say it's a very serious issue, and frankly, it's frightening, boss. When you're talking, डर लग रहा था और कुछ नहीं. So let me not get into it. And
all I'm saying is, today we have moved away from a reasonable assurance to an absolute assurance. And perfect. That is why what is happening, why I said from a true and fair view to a true and correct. The reason is, if you look at the CARO reporting per se, and if you have covered all aspects of it, take a simple example of financial ratio. Take a simple example of a loans taken from on behalf by pledging the security or of your joint venture, assets of the joint venture. You're taking all of these and just putting it. That means what are you doing? Virtually, you're doing a true and correct.
Correct, yeah, right.
So therefore, to say that my opinion is a true and fair, therefore CARO is a true and correct, it can't go. So I think you have to migrate to what is called a true and correct scenario.
There's no question of to the best of my information and belief. I'm supposed to get the information, supposed to do it. That's all.
Absolutely, I'm supposed to do it. Please let us know what is driving the change. So I'm going to take the question. I'm just going to do it. So I'll be fast in this.
Want to take some rest? I can read out the question for you.
No, Pankaj bhai, main le leta hu. I'll quickly answer this. Please let us know what is driving the in respect of Schedule 3. Is it only CARO 2020? Absolutely. Now, CARO 2020, you made the auditors responsible. Now, how can you make the company not responsible? Who is supposed to take the ratios? Who is supposed to compute all of this? Who is supposed to confirm that there are no security issues? It's a company. And therefore, Schedule 3 is driven by that. critical issue having materiality, misstatement or diversion of funds or non-compliance, whether the same has to be qualified in the auditor's reports or mere mention to notes or accounts along with the bill. Absolutely no. You cannot be saying that diversion of funds will have to be reported. And if there's a diversion of fund, it's a fraud. As simple as that. So you need to examine the financial statement from a fraud perspective. And if it is more than a crore, you need to have a responsibility to the government. So absolutely, it is not going to be just in the, so that is the reason why I'm telling you that our responsibility because of CARO 2020 has actually overall our way of how we are going to present our financial statements report itself. So it's very, very essential that you cannot get away just by a representation or a notes to accounts. Absolutely, answer is no. So the next question, oh, I went to the last award. Okay, 1 minute. So next is, okay, next. Loan sanctioned by a consortium of 4 banks and one of the bank declares an NPA, whether the entire loan becomes an NPA and how do you report? Will it be a change in the bank? Absolutely, because you can't have a situation where an NPA could be, see, if it is a consortium of a banker, right? And a consortium of a banker, one guy reports as an NPA, the other reports as this thing. Unless that consortium banker he was only a very insignificant part, or he is a private bank, the consortium of a banker may not necessarily. So therefore, the NPA is only restricted to that account from where it is. But if it's a willful defaulter, whether this information was shared with the other banks is what becomes very, very important. So therefore, you need to be very, very careful when you're dealing with that part of it. Continuing with my earlier question, in case of repayment has been made to the bank which has declared company as an NPA from funds raised from other bank as on balance sheet, there are no. How do you report such cases? Again, you need to send out a confirmation to them as on the balance sheet date if they are not there as an NPA, but if they have defaulted during the period, you should be reporting it as a part of the process because it is default during the period. So earlier it was from 1 day to 10 days used to be there. Now you have to report during the period. So that becomes very, very critical. Where the answers are to be given yes or no, do we need to bring the fact that in fact and quantify its impact? There is no concept, Amit, there is no concept of yes and no. It has to be comprehensive. You have to carry out procedures and that should support it. There is no question of yes and no. Earlier it should be yes, there was nothing. You need to go back, examine each of these aspects and look at if it really impacts your financial statements, your internal controls, and then as far as it's concerned, even your CARO reporting. Can PP maintain in Tally be considered means no? Proper answer is no, because I talked about electronic that you cannot make any changes. If your Tally has got all that security where you cannot go and make any changes without an appropriate approval for which there is an audit trail, then it will fall under the definition of proper records. Tally normally is not considered as safe as an audit trail. Anybody can change it. So you need to relook at it. So what about the treatment of assets purchased from OLX through bank? I'm not sure what the question was on the treatment of assets purchased through bank, but let's assume that you purchased some assets on a bank and you have got the audit trail, you've got the information, you've got the assets which has come to you. Let it be OLX is only a payment, but against the payment is made to somebody else in the process. And once that process is done, you have all this information captures as normal, like any other purchase of assets. You put that as a part of your asset register, date on which person, mode of payment, manner in which was done, when was the asset received. So you can look at all of that. Next question is from Amit. Again, in case of deemed deposit, in case of advances received from a debtor appropriate for more than 3 or more, what should be done if they come in? Now, this is exactly where the deemed deposits comes back. Absolutely, you're right. They cannot write back as sundry balances written back, but it forms under the definition of deemed deposit. So therefore, please look at that much, much more. Is the willful default defined in anywhere? The Reserve Bank of India has defined that. I've put it in my presentation slide. Look at the guidance note, because all of these are pulled out from the guidance note. The Reserve Bank of India has defined who is a willful defaulter, and that has been defined there. So you have to look at from there, because willful defaulter is for the purpose of banks, and Reserve Bank of India normally does that as a part of process. Fraud detection is a very daunting task, but fraudulent practice can easily be taken, which can go leads further. Absolutely right, Ramdevji. It's a very daunting task, especially you are all the experts on GST and all of this, and you will be hearing all this talks about GST. How do you do adjust? How do you GST 9Cs, and how do you do reconciliations? How do you use the tables? How do you have the input tax credits and ITCs and all of that? It's a great way. If suppose you find out and then go back and issue an audit report and say so much of excess of ITC has been claimed knowingly, or excess of tax deductions claimed in a return of income. देखा जाएगा साहब, अगर disallow कर दिया तो disallow कर देगा. Anyway, we can take. Even claiming something which is not as per books can be considered to be fraudulent. So therefore, please be very, very careful how you're dealing with it. How to differentiate between a fraud and a willful defaulter? A willful defaulter is where I've borrowed a loan and therefore it relates to non-repayment of a schedule. So therefore, you have taken a loan and you have to repay in 36 months and you have not repaid. That is called willful defaulter. Fraud is, I have taken the money saying that I'll buy this asset, but I've not bought this asset, I've utilized for something else. That is called a fraud. So that is the distinction between a fraud and a willful defaulter. Is insurance coverage of PPA inventories and indicator compared not relevant completely? No, insurance coverage is just only a manner to protect your assets. It is not a basis for comparative. Insurance companies always will use their basis to always make sure that when they pay the amount to you during the time of any damage or an accident, it's much lower. They are not comparable. They are absolutely, you should not even look at insurance because insurance is a very different game altogether. Temporary suspensions of activities is a very much part of it. Is that necessary? Absolutely right. Temporary suspensions of any activities when you're reporting, so much of cash is not generated, so much of revenues are not generated, people are not being paid, salaries are not paid, the rent, the overheads are not getting recovered. So therefore, it will fall under the category of cash losses incurred during the period. What are the financial ratios to be verified? It writes from the debt equity ratios, fixed asset turnover ratios, gross profit ratios, net assets to owned fund ratios. So all the ratios will be defined. That is the reason why I'm telling you that these detailed notes will come through as a part of Schedule 3, which you can look at sometime very closely. In respect of going concern following procedure outline, 570 will take care of. Absolutely no. 570 is just in English. Unfortunately, they define 570 saying that look at the forecasted transactions. Forecasted transactions, you need to validate it. Validate it again, you need to go back and check whether they were valid orders. You need to look at whether realizability is there. You need to get a confirmation whether this company might be very, very successful. You may not have successful, the other company might be in doldrums. The company may not have information to even, they may not even be having money to pay the salary. So therefore, these needs to be examined. SSF 570 is a direction saying that these are the case of uncertainty, this is how you should reporting. Whereas the procedures that you need to follow is completely different, that which you need to be. Critical issue having materiality misstatement of diversion of funds or non-compliance, whether payments and filing returns, whether the same has to be qualified, or may I mention, I've already answered this point. Can cash and bank deposit through bank internal login can be a confirmation? Absolutely no, Amit. You cannot be taking this this one because you need to have independent this is not an independent source because majority of the frauds happens through such information only. You need to have a login which should be given by the banker, not by these people. So therefore you cannot do this. That's all I have on these questions. Are there any open questions which I have?
Chat, no, I don't think we have any questions, Ganesh bhai. And I think
Pankaj bhai, I intelligently came in the last only because let Ganesh bhai only answer all the questions.
There is one question, sorry, but is it possible to resign just before the signing of balance sheet due to this agreement? Answer is yes, but unfortunately today, if you sign, MC is coming back to you and saying, why are you resigning? So that is the biggest challenge that is coming through. So please ensure when you're resigning, give all details why you've resigned, qualify the report if you need be, and then do it.
Quickly, Ganesh, thank you very much. Just thank you note before the airway closes. Otherwise, we'll be in a hurry to just close it. So I thought I'll not make the mistake. Thank you very, very much. And as Ganesh, when you're talking, frankly, I have one humble request to you, Ganesh. See, when you're talking, I think each slide what you took can be explained in 30 minutes, 35 minutes. Okay, so if you can just have some young speakers who can just take up point by point, and we have a 1 week session or so, explaining it into bits and pieces and trying to cover deep. Maybe it will help many of the members in a better way is what I was thinking.
Let me come
You
back
are
on
the
this.
best judge. You are the best judge.
So let
If
me
you-
come back. No, let me come back on this. Let me come back on this part of you're absolutely right, series. But CARO cannot be taken by young members. CARO should be taken by experienced people. So therefore, what I suggest is whenever you have such situations, the best way to deliberate is send the participant, these are the questions that you want to, like similar one that the way you did for income tax, do it for CARO, and then have a panel for discussions to this. Then what happens is the knowledge that gets shared is much, much more efficient and effective than somebody going back and say, you should get this. My way of doing it. Probably you could have a different point of view, but that's what it is.
So thank you, Ganesh. It's a virtual present, and once it opens, I'll personally ensure that I'll come, have a tea with you, and give this personally to you.
Thank you so much.
Thank you.
Yeah, bhai, aapki hai abhi.
Sir, after you talking, what do I talk? I think only thing which I can tell you is this, Pankaj bhai, every month we should take 2-3 topics, not only on CARO, but also might be we need to form a group for doing auditing standards also, which is one of the most important one. If we are able to decide, say example, 2-3 things, in a manner where, you know, CARO is one thing, Companies Act requirements is second thing, third is auditing standards, because a lot of CARO related points are again going to be dependent on lot of compliance with auditing standards, which is going to be ultimately very crucial. So I think, Ganesh bhai, if you think it appropriate, we should actually take what kind of documentation also should be required to be done with regards to this. What is the kind of audit evidence?
There is a program scheduled on 19th Saturday for documentation in auditing standards. In fact, Jawahar was supposed to take it, but I think Murli Krishna sir and Surya Kumari are taking it in because Jawahar had some other engagements.
Great, Pankaj bhai. I think somewhere we need to actually strategize. 1 week to be called as company law, 1 week to be called as GST, 1 week to be called as income tax and all, so that our sessions can be actually planned well. Whether it is 100 or 50 members, doesn't matter. I think people who are interested can actually go in forward. But yes, I am waiting for your century to be hit in capacity of chairman, which is not too far a reality, and it's going to be a gala program which we are planning, I am aware of. But after that, I think we should actually plan this kind of series, which will make whole lot of difference. One week full of Companies Act के अंदर क्या क्या requirement है, then income tax में what are the things which are coming up, different topics. Some similarly like auditing standards and lot of such things are there. We need to strategize it well, and there is one message which has come on ICDS also. We need to do it undoubtedly, and friends, I can tell you that on the last day, 100th series. Yeah, Pankaj bhai, you can tell.
No, nothing. 100th. I just wanted to tell you 100th is on 26th. But there is one request for Ganesh which is coming again and again on messages, and some people are asking, our close friends only, Ganesh, भाई ये PPT देगा क्या?
नहीं देगा. भाई तो देगा ही नहीं. भाई बोले, इसलिए that's the reason I said, please download the detailed guidance note issued by ICI.
Yeah, so I think all the members who are present, they were all asking me to send the PPT, and very clear disclaimer I have written, PPT will be put in website once received from speaker.
No, I will send you the PPT, which is the site which has been by ICI guidance note, that will be put.
Thank you. Whatever speaker gives, we can.
That link, I will send it to you. Please put it. Okay, one last question which came up, are the financial ratio mandatory for companies which don't have? Financial ratio is nothing to do with bank borrowing. It is only to bring in the liquidity, whether the company is in a position to repay the loans. That is the reason why they brought in this financial ratios. Borrowings has got nothing to do with it. I hope I answered Ramakrishna on that.
Thank you.
So thank you, Pankaj bhai. Thank you, Ganesh bhai.
Thank you. Before I just, at least Ganesh, I can thank you. I don't have to introduce you. And I just like to tell that, yes, from 22nd of November to 26th of November, we are going to have 5 problems. We have 5 programs, which is 96, 97, 98, 910. 100 program is on 26th. Yeah, we are doing it in a big way. Would like to know, and this 100 program being done after this committee has taken over. And Ganesh bhai, the name is Powering Ahead, Century on a Sticky Wicket.
Pankaj, I didn't know. Did he? Really don't know what he said, but I said I hit a century. I started this session.
Oh, great! Yeah. No, in fact, I smiled also. Ganesh, I thought you are. Because you are one person who have been attending every session, most of the sessions, and you are an inspiration to many young people who should understand that if person like Ganesh can sit and listen to speakers, then definitely we are. Okay, then Ganesh bhai, I'll not take your time. You've been talking for a long time. Thank you very, very much. Yeah, thoda sa dar gaya, but definitely I would see the recording again and again. And there are many instances where I think
Jo dara wo mara, Pankaj bhai.
I should be listening to your thing. And Ganesh, is this applicable to independent auditor also? A C auditor, independent director.
Which one? This CARO?
What all you have said. What an auditor has to take care. If there is a problem, should independent director, because many of the chartered accountants are becoming independent directors. And do they have to bring this out somewhere? Or is it their duty to bring it to notice of auditor?
Okay, so unfortunately, in India, right? 2 people escape. One is promoter, the other is director.
Right.
2 people escape. The only person who gets fixed is the auditor. Now, what is the role of an independent board of directors? They are supposed to be manage between the shareholders and the management. Whereas, if you really see, they're all called the cashew nuts directors. They come, chai piye, garam piye, chalo chale, bas hote hai. Day is not far away. A day is not far away where every independent director also will come into it, because see, it's like this. Yeah, there is a saying where you can go on beating a sheep, right? You thinking that it won't do, a goat, you can't do anything. एक दिन वो पलटा, पूरा फुटा. वो दिन आएगा, boss. वो दिन आएगा. I'm waiting for it, because you can't bring accountability only to the auditors. Bring accountability to the promoters. Bring accountability to this. I don't know how many of you know, but there are more than 4,000 cases of where there is auditors resigned because of fraud. Do you know that reason? जाओ एक बार MCA वेबसाइट में. कहाँ पे आया? कहाँ पे आ रहा डायरेक्टर्स किसको जेल में डाला हुआ? कहाँ पे आ रहा promoters को जेल में? So that is a reality, but day is not far away, because everything is going online, and slowly things will change. Not now, but 5 years, Pankaj, we will both be sharing that.
Thank you, Ganesh. Thank you very much, everyone. There was about 140 people who were there throughout till the question answer started, and all this 94 who are present now. Thank you very much. And we had about 20 people watching on the YouTube also, which the link was given. So even to them and all the members here, thank you very, very much, Ganesh bhai. You have been doing excellent service for ICA, and I'm sure you will continue to do so, and you don't require any other thing. But thank you very, very much. Thank you, Devai, for being with us throughout the program. And yeah, we'll see you tomorrow with transfer pricing. But please mark your diaries for 22nd to 26th, where we'll celebrate a century. Okay. Thank you.
That is what Naresh said. It is September, not November.
Yeah. September.
Yeah. Thanks.
Thank you.
Thank you so much, man.
I'm ending the program.